There's pros and cons to investing in the stock market and in syndications. For me, the huge plus was that predictability I was looking for. That was a real big motivator for me. And what I kind of concluded is that I was comfortable being passive versus active. And by passive, my definition of passive is that I'm giving up control. So I'm a small piece of a bigger deal. So I'm one of many investors pulled together, which is basically definition of syndication. And I was okay with that concept because I was so busy in the corporate world that I didn't have time to be active. So I was very comfortable going passive as long as I ended up being very well diversified. And what I've learned over the years, I got to be diversified across asset classes, geographies, and operators. That's kind of my three pieces that I try to get diversified across. But the real motivator for me was kind of focusing on the lower risk, more predictable cash flow. And so having that predictability coming in, having the returns be much more predictable than the stock market, that was truly appealing to me. I would say one of the biggest cons of investing in syndications on the other side is that, I can't go onto a computer screen, click like sell my Apple shares and have the cash in 2 days, right? It's very much different than that. And so that's what I was giving up. I was giving up control for diversification. And I just, went down a very long path and I've been going down it ever since. But it ended up being a really good fit for my personality. And that, I'd say that's one of the most important things. There's 1,000 ways to invest, frankly, even in the stock market or in syndications, different strategies. For me, the fact that I was comfortable being passive and making bets on other people, and the fact that I was really looking for that more predictable cash flow. So I kind of operate in a box where I target maybe 80 to 100% occupied buildings. That's my sweet spot. I have very specific geographies I target, very specific types of assets that I target, and even asset classes. But bottom line is that when you're going to be passive, you just got to make sure that you're fitting into 100% comfort level of a box that you're putting yourself into as far as your own criteria.